So, good morning, everybody. So, we're going to look at a little bit about Chapter 8 today. And Chapter 8 involves the financial structure throughout the global environment. And we're going to look at economic analysis and how finance is designed, and it promotes economics throughout the world. So, we're going to look at the chart here, and here is where companies get their money from, and we look at four countries: United States, Germany, Japan, and Canada. And you'll notice the United States, when it comes to bank loans, does not take advantage of them as compared to Germany, Japan, and Canada. When it comes to non-bank loans, then things jump up, right? So this comes from private equity, right? This comes from private equity. And when it comes to issuing bonds, again, America leads the way. And everyone, except for maybe Japan, is big on stocks, right? America's 11%. 8 for Germany, and 12 for Canada. So this data runs from 1970, as you can see, to 2000. It's 30-year data. So it comes out, and if you're looking at that chart, as we just did, there's a couple important points here. Stocks are not the biggest source of external financing. And marketable debt and securities is not the biggest way in which businesses finance their operations, and we just saw that, right? So going back, indirect finance right here is the bigger way, for at least for America anyway, and bank loans for the rest of the world. So, banks are the most important source of external funds. And I think there's going to be a big takeover in the pharmaceutical industry. I think Celgene is being bought up by another pharmaceutical company, and they're going to use bank loans to fund the takeover, a big bank loan. All right, and there's been a lot of issues about regulation, right? And I think Trump was trying to come up with a way to provide less regulation for the banks and the financial system. All right, so when it comes to debt, right, there's always a covenant, right? There's restricted covenants, and that come in play. It's there's a lot of legalese when they issue bonds. Well, there's a lot of restrictions about how much more debt they can take and how much dividends they can issue to the shareholders. And of course, we have transaction costs that always go on, right? And the big game that's being played now, especially with online banking, is you're trying to reduce transaction costs. So the new online banking, they have smaller costs, and I pay I think $5.95 commission on my stock, but I could probably do better than that. But I don't buy that much that often. So all right, so moral hazard is a very important term here, and moral hazard is that what happens is if insiders have more information than outsiders do, like me and you, and it's called asymmetric information, and they get to trade, and they will make a profit on the information they have. And there's always this thing about moral hazard, about too big to fail and bailing out banks, and then does that create a moral hazard for banks to again be too big to fail and always figure, well, the United States will bail us out. So All right. So, basically, there's always a question about how much information is available and, quality information. So, if information is not there, a lot of stocks won't be sold. All right. So, basically, how does one solve, adverse selection problems in securities and companies, right? First of all, a lot of places now are basically trying to sell information, right? If you join a website that sells information, and you have to pay to join that website. And again, government's supposed to have a situation where they always create for a frequent flow of the price discovery and information, but that doesn't always play out that way. As we know about the Enron case, right? And actually, here it is. So Enron implosion. Just speaking of the devil, Enron Corporation basically declared bankruptcy in 17 years ago, right? Government basically cannot eliminate, the fact that there's insider information. And there was a lot of changes after that. There was a lot of acts that came up. Sarbanes-Oxley and all those acts, right? So financial markets, and a lot of people lost their pension and then their 401ks. You should watch the movie The Smartest Guy in the Room. I think you'll enjoy that. All right. So again, here's the whole thing with moral hazard, right? We're the principal, right? We buy stock, right, or debt. And we have less information than the manager. So here they are pursuing managers pursue their own benefits and instead of looking at the profitability from, they have their internal stock options, And they came up with all these acts, and here's some of the, more regulation and intermediation and monitor companies more closely and stress test the banks. Anyway, so, most companies will like to take on risky projects. And if things fail, they just will not, pay back the loan. They'll go into debt, and then basically their debt rating is lowered to junk level, or that type of thing. So again, here's the monitoring and the stress testing of banks, and supposedly the Securities and Exchange Commission is supposed to do all this kind of stuff, but as we know with them, that if you're paying a lawyer at the SEC $60,000, and then they go to a company that's paying them $300,000, they have an incentive to leave. So there's a lot of problems with enforcement of and stop moral hazard. So here's a table that simply shows all this and breaks it all down. And it breaks down, according to the facts we went over. And here's a part of the rest of that table. All right, so basically financial repression refers to the fact that information, the standards are not being met with regards to accounting, and basically there's less incentive to channel funds to most productive use. And in a lot of other countries, there's a lot of poor legal systems. I think Africa is trying real hard now to come up with legal banking systems to prevent all kinds of crazy stuff from going on. So here's, as I was just mentioning, that the financial system in developing and transition countries such as Africa have many difficulties. And, corruption is the big problem there. All right, so I believe the rest of this is just boilerplate. So anyway, it's interesting here is that they talk about China actually a little bit. As China gets richer, the strategy of maintaining a high savings rate to support economic growth is unlikely to continue to work. China will need to allocate its capital more efficiently, which requires that it improve its financial system. And I guess they're working on that, right? And, right now with the whole, all the problems going on with America and China, this just adds to the problem with all the tariffs, you know what I'm saying. It's hurting China tremendously. Alrighty. So that's it. And that's it for basically, read chapter 8.